Good afternoon, friends. I welcome everyone present, both physically and online, to this third study circle meeting. Friends, we all know discount is just a plain Jane language, means simply a reduction in the price. But the complexity start when we have to deal with GST implications of various types of discounts, such as cash discounts, volume discounts, promotional discounts, and whether discount was made pre-sale or post-sale. The recent 56 GST Council meeting has amended Section 15 and Section 34 of CGST Act in this regard. Today, we have amongst us very learned legal luminary, Dhaval Talati Ji, who has taken the burden on himself of guiding us through this treatment of secondary and post-sale discounts under GST. Please welcome Dhaval Bhai with a loud round of applause. I would now request our President Parth Bhateka for his opening remarks and announcements.
Good afternoon, everyone who is present online, and also some of our members who are present offline physically. At the outset, I really thank Dhaval Bhai for taking up this topic because, once the 251 circular came, it sought to clear a lot of things, but just like how all circulars are. Just how all circulars are, it has also ended up creating a lot of issues. And that is why I think Dhaval sir is one of the best persons to explain what are the issues that arise out of the circular. Now, before we start the session, there are a couple of, now as you would know, it's usually the convener who would do all the announcements. But I had to take this opportunity to do certain very, very crucial announcements. As we all know, and we've already shared the save the date, on 15 November, we are celebrating our 75th annual Foundation Day, 75th. And the venue is YB Chavan Hall. It starts at 2:30 onwards. And even over there, the chief guest is a sitting Supreme Court judge, Justice Bindal. And later on, we are also going to have a nice panel discussion on how GST practice will shape up in the next 10 years. Of course, after that, we'll have a lot of talking about GST and everything. And then we are going to have an entertainment program, which is entirely run by specially abled people. So that is something which is very good. And the most important thing is that I'm just sharing the flyer now, and the flyer will be shared with everyone from now. I want maximum participation. And see, enrollment is a very small percentage of what we are actually going to incur. The association is going to incur. But the aim is not enrollment. The aim is not the small amount that we want that. So we don't want to have a situation like we have today in the service cell where people come at a later date. It is there's seats empty. We want to target at least 350 people to enroll. And we know that Foundation Day is usually with family. And please come with family. It is going to be a lovely program. It will be very nice to meet a lot of old members that whom we are going to call. It will be very nice. And 75th year, this Foundation Day is not my Foundation Day. This is our association Foundation Day. And we should all be proud. Not many associations can survive till 75 years and thrive, I would go on to say. So that this is the Foundation Day. Flyer. I will be sharing it with everyone. Please enroll along with your family. It starts at 2:30. It'll go on till dinner. It'll be a lovely program. And I request there to be maximum participation for the Foundation Day. So that is one thing. The other most important thing that I wanted to say, because we have seats which are filling up fast. We have our RRC. The early bird discount is ending on the 15th October. And I request everyone to quickly enroll because later on the prices may rise. So the RRC, I'm sure everyone is aware about the RRC, but I'm once again reminding everyone, please enroll for the RRC. And one more important announcement that I want to make is the most immediate. We've had a phenomenal response. We've had a phenomenal response by now for the GSTAT seminar. We are right now, as we speak, right now we have at least 125 to 130 registrations, and many more are expected. We are expected to cross 150, if not more, almost 200 members. It is tomorrow. It is barely 299 rupees. I request everyone to please enroll. There were two ways in which we thought that we will do this seminar. One was a longer duration seminar, but then those where we could get into more details. Now, but the idea over there is that the essentially GSTAT has not really started. So no one can claim that they have experience or what is there in GSTAT. But what to expect from GSTAT and drawing from our experience from not just the VAT the VAT tribunal, also CSTAT tribunal. Both the members who are there, Rahul Thakur and Nikita madam, both have regularly appeared in VAT and also in CSTAT. So drawing from those experiences, eventually tribunal is tribunal. It is the final fact-finding authority. And it is very important for you, even if you know that your case is going to travel all the way till the tribunal, it is very important to know what the tribunal expects from you so that you can even be careful from the show cause notice stage onwards, not just show cause notice, I would say ASMT onwards. So that is why this is a very, very important seminar. It commences tomorrow at 11. It'll go on till 2:30. And there are several local associations also who have agreed to partner with us over here because we want this program to be available to everyone. See, GSTAT also is going to be by and large online. At least that's what they're claiming. How the modality will work, we will not know. And obviously, once the GSTAT starts, we realize that what are the things that are coming out. We will obviously have another more detailed seminar. That goes without saying. But here, where now that the GSTAT is going to begin, we know after 7 years, we need to ensure that our members are ready from the procedural aspects and also from the legal aspects. So that is why this seminar is very crucial. It is tomorrow, Saturday. It starts at 11. I request everyone to enroll at the earliest. Even if you don't go and enroll your name, you just pay 299. You can call either Praveen or Abhishek. They will send you the link. Registration is also very easy. So please enroll as much as possible. And sorry for taking up too much time. These announcements were a little important. So now without wasting any more time, I request Dhaval bhai to start his session. Sorry. Yeah. I now request our chairman, Pranav Kapadia sir, to say a few words before Dhaval bhai takes over. Thank you.
Good afternoon, everybody. Respected dignitaries on the dais, President Parth Badega, the office bearers, Vinod Maskeji, Sunil Joshi ji, convener Ajay Talreja, and our learned speaker, our very own member and legal luminary, Shri Dhaval Talati. Very warm welcome. And of course, to all the participants who have logged in online as well as who are physically present over here. A very warm welcome to all of you at this study circle meeting. A very important topic to be discussed today, post-sale discount. Well, as far as practitioners who have been, practicing under VAT, I think they have had this concept of post-sale discounts and various issues related thereto. Even in the service tax era, there were various issues and various tribunal judgments to the effect that whether such post-sale discounts, whether they will be considered as a service, whether there is a supply, as we call it now, a supply under the GST Act, whether those incentives or the post-sale discounts, which are not tax credit notes, whether they will be treated as a supply or not. And then government coming out with circulars. One circular it came out with circular 92. Then it came out with another circular. It withdrew that circular subsequently. And now recently in the 56th GST Council meeting, they again came out with few clarifications and the proposed amendments to the CGST Act regarding treatment of these discounts and Section 15, Section 34 related thereto. And thereafter, Circular 251 coming and making some of the clarifications. Other clarifications are still yet to come. And we all were having a discussion before few days before this circular came in with Dhaval Bhai only. We were having myself, Parth, Dhaval Bhai. We were all sitting in the library over here and discussing this matter. And then this circular came in, and hence we thought that, you know, to guide us all, Dhaval Bhai would be one of the most appropriate persons to guide us on these aspects and the emerging issues out of it. You know, we all know there are various issues and new issues keep on emerging because of the changes and the thought process that the government brings in, the circulars and the clarifications which they try to bring in and which bring out more litigative matters, I would say, after seeing those clarifications. So I think we thought it deemed that we should have Dhaval Bhai to, you know, give us a full-fledged overview of the treatment of post-sale discounts, and hence we have him. Thank you, Dhaval Bhai, for accepting our invitation. I'll now request Ajay Talreja, convener, to formally introduce Dhaval Bhai.
Thank you, Pranab bhai. We all know Dhaval bhai, basically he doesn't need any introduction, but for formality's sake, I'll just speak a few words about him. He has an experience of well over 40 years. He's an active member of our association. He was an editor. He has authored various articles and also being part of various periodicals published by our association. He has co-authored books on sales tax, study material on sales tax laws in Maharashtra for beginners, and also short publications. With this short introduction, I would like to hand over the mic so that we get the maximum time with him. Yeah. I would request our president to, as a mark of our token of our love and appreciation, to give him a small potted plant. Thank you. Dhaval bhai, please come. Sir, only down here. Yes.
Good afternoon, everyone. President of the association, Parth, Chairman of this committee, Pranab Bhai, office bearers, Convener Shri Talreja ji, and the members present, online and offline. At the outset, let me first thank the association for giving me this opportunity to share my views on a very important topic. Though the term secondary discount, you may feel it's very simple, but once I proceed in my presenting my thought, you will find that instead of making things simpler, as rightly said by our president, they have made things very, very complicated. And as a personally, let me tell you, in spite of complying the law as envisaged, still I am in appeal, maximum appeal in big cases where the claim of secondary discount is been disallowed for a flimsy reasons. So to begin with, secondary discount, as we said, discounts provided after the initial sale transaction, typically between the manufacturers, dealers, distributors, not directly visible to the end customers. And there are various types of discounts, secondary discounts, and they are commonly known in the market as volume discounts. See, basically, typically, this is based upon your performance, how much quantity you lift. And accordingly, the discounts are offered. Incentive, performance-based discount. Similarly, the wordings are different. If you achieve certain turnover, you will get additional discount. And the promotional discounts, when we are witnessing the Diwali is near, and FMCG goods normally are dumped in the market, so that there is seasonal demand is there. So whoever purchases those goods lifts up those goods in bulk and avail the maximum discounts offered by the manufacturer, importer, as the case may be. And with the assumption that down the line, this discount will be passed on to the ultimate consumer, who is going to bear the ultimate final cost. So this is very, very important. So the today, as I'm narrated that how am I going to present this. So agenda for the today's meeting: GST legal framework on discounts and the key provisions, secondary post discount. For that, the government has issued various circulars every now and then, as and when the representation goes, they come out with the certain circulars, they withdraw certain circulars, and ultimately at the end of the day, now we are with only two circulars on hand: circular 92 of 19 and circular number 251 of 2025. Various case laws to support our contentions before the government authority to allow those secondary discounts and way forward, having got amending the section 1534, and therefore what will be the scenario of the trade and what precautions as of expected of the business community. So as I have stated, what is secondary discount, I have already explained. So I need not waste further time. Now, very, very important, we must now understand the legal provisions enumerated under the law by the draftsman. Friends, we have already witnessed BST era, VAT era, and now we are under the GST era. But friends, if you look at the old provision under the BST and the VAT era, such stringent provisions were not there. And they were only looking at the agreement. And if it has been there, if it is been proved that nothing is afterthought, so the claims are being easily allowed. On taking these clue from these erstwhile 2 acts, now we'll move to the GST and the provisions thereof applicable to secondary discounts. The section 1615(3)(b), which talks about the valuation and the provisions there made of. As long as trade discount is concerned under the erstwhile act, if it is apparently allowed on the invoice, it was never considered as a price consideration. It was allowed. There was no difficulty. Even in the GST era, there is no difficulty. The real difficulty comes when there are post-sale. In common parlance, it is known as the secondary discounts. There, unnecessarily, department has stretched this issue too far, because they have to pay something out of their pocket when the tax is on the gross amount is deposited. So I'll read those provisions. 15(3)(b). After the supply has been affected, if such discount is established in terms of an agreement enter into at or before the time of such supply and specifically linked to the relevant invoices. Simple. The first condition laid down there is, they have made in black and white. There should be an agreement in place in advance. And the purchaser, whoever wishes to buy, should be aware about the agreement. this such scheme is been pronounced by the manufacturer oblique importer, and he is entitled to certain discount post sale if he achieves certain target, if he achieves certain turnover, and there are further few schemes which are just to push the more sales in the market. So the what I am trying to tell you, nothing is allowable provided there is an agreement in place. Keep this thing in mind. Then input credit as attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient supplier. Friends, this is also an additional burden for a poor supplier, that he has to see that the whoever purchases such goods and avail this discount has reversed his input, and rightly so. There is nothing wrong. But as a supplier, he is not in a position to know each and every whether that particular person is reversing that ITC or not. But this is a stringent condition is been laid down there. Simultaneously, one must also read the definition as provided under section 2 subsection 31, which defines consideration, sir. And if you look at the definition under the erstwhile VAT and the BST Act, more or less everything is done same. But the word, they want supplier to come in their trap by inserting the word inducement. And this very word inducement you will also find in circular number 251 dated 12th September 2025. What is inducement? Means you give some offer which opposite person, and he is induced, he is inclined to accept that thing, and he has availed that thing. Let me read the dictionary meaning. Something that is offered to somebody to make them to do something. Means he is being induced. You, Baba, you perform this, and you. And government is trying to give a color. Baba, some services you have offered to the buyer, and they want to tax it that component. Basic. Okay. Okay. Yeah. So this is what you will find such word for the first time under the GST Act having a flavor of erstwhile Service Tax Act. And I will touch upon this part where the learned judges have in 1983 have anticipated this thing in the case of MICO, which I will deal at a later stage of my presentation. And not down here. Oh, okay. Sorry. Now, section 34, credit notes before the amendment. Where one or more tax invoices has been issued for supply of any goods or services or both, and the taxable value or the tax charge in that tax invoice is found to be exceed the taxable value or tax payable in respect of such supply, or where the goods supplied are returned by the recipient, or where goods or services or both supplied are found to be deficient, there is no such issue in such cases in allowing such. But the registered person who has supplied such goods or services or both may issue the recipient one more credit notes for supplies made in a financial year for containing such particulars as may be prescribed. So ideally, if you read section 15(3)(b) and 34, it states that whatever discount you passed on the basis of your agreement, and the buyer has reversed those ITC, simultaneously to support that thing, a credit note should have been passed. And accordingly, if it is well within the time, that is now the 30th November of the subsequent year, and previously it used to be a 30th September of the subsequent period. And if it has been done so, then in that case, this is allowable. And there was a proviso that no reduction in output tax liability of the supplier shall be permitted if the incidence of tax and the interest of such supply has been passed on any other person. This provision was in existence till 30th of September 2025. In so this is what the section 34 speaks about. And credit notes after amendment 110, there is an amendment where one person or more, I will not read, but there are two crucial proviso has been inserted, because it in the 56th council meeting, it was decided that section 15(3)(b) will be removed and will be replaced by a new word that I will come up on. In the proviso says that no reduction in output tax liability of the supplier shall be permitted if the input tax credit as attributable to such a credit note, if availed, has not been reversed by the recipient, where such recipient is a registered person, or incidence of tax on such supply has been passed on to any other person in other cases. So this is what was there in some flavor of section 15(3)(b) is been inserted here, and accordingly the section 34 as of date is been amended. And I'll come upon section 15(3)(b) and the recommendations of, as I have stated, that even the amendment is being proposed for section 15(3)(b). Previously, till as of date, the amendment is not yet been carried out. Let me be very clear on this aspect, that amendment is still pending, but it is proposed in 56th council. So now there is an overlapping effect as of now till the amendment comes. Discount must be in terms of an agreement that is up to 39, and the ITC attributable to the discount reversed by the this. Now, after the recommendation, the proposed amendment to section 15(3)(b) will look like this: to omit section 15(3)(b)(1), omitting the requirement of agreement and specifically linking of the same with the relevant invoice. As I already stated, that same provision has been by way of a proviso has been added in section 34. To amend section 15(3)(b) to provide that the discount should be granted through a credit note issued under section 34 of the CGST Act, and to correspondingly amend section 34 to include a reference to section 15(3)(b) to provide for a reversal of ITC by the recipient, where a post-sale discount is given and the value of the supply is reduced through CST credit note. So they, in short, what I am trying to tell, the government has, see, on every representation, they have come out with the circular or the amendment. Here in, we were expecting when circular 251 will be issued, was issued, all controversy will be put to rest by proposed amendment to section 15(3)(b) and the section 34, but nothing. Instead, in my personal view, the controversy has increased. This is what, friends, up to this. Now, there was lot of hue and cry, what will be my status when I claim my deduction for secondary discounts. So the same thing has been clarified in 2019 by way of a circular 92, wherein it has been treatment of sales promotion schemes under CGST has been explained. Free samples and gifts, means the issue is very, very clear and not to be discussed further, but for the sake of discussion, I'll just discuss. Not considered a supply unless covered under Schedule 1. This is very clear. If it is a stock transfer, then it is a taxable, but in the hands of a recipient, if it is been treated as a free sample or gifts, then the recipient state will not qualify for the ITC. ITC not allowed on the input services used cover under section 17(5)(h). Very clear because of the word therein provided in 17(5). Buy one, get one free. Treated as a two supplies at a single price, not as free. Maybe composite or a mixed supply. ITC allowed on the inputs services used. To push the sales in a market, at times the scheme is been pronounced by the manufacturer or an importer to push those goods and stating that if you buy one, you will get one piece free. If you buy 10, you will get 10. Whatever be the terms of a scheme by way of an agreement, then in that case, it has been stated that it is for a one price. And as long as similar goods are concerned, there is no issue. It will be, in the eyes of law, it will be a composite supply, nothing sort of any difficult. But in case of a mix, if the revenue wants to harass, if you buy motor car, you will get something free by way of a cover, etc., etc. At that relevant time, the revenue may take the objection that whatever goods, if whatever it attracts higher rate of tax, then they will try to squeeze you there. Then be aware, when you pronounce such a scheme, you need not invite this trouble and see that these are basically of the same similar products only. Pre-supply discounts, buy more, save more. Allowed as deduction from the value of supply. Conditions mentioned in the invoice and a link to the specific invoices. This is very simple. In such cases, there will not be much difficulty, but the refutability will, they will try to sort it out in case of a post-supply discounts, that is either at the year end or at volume rebates at a regular interval. At times, as we have discussed, what is secondary discounts. Let me once again come to that aspect. They may be in the nature of volume discount, turnover discount, or whatever may term you define. And such credit notes are issued after the supply takes place. So once again, we are coming back to the provisions of section 15(3)(b) as in existence as of date, that there is an agreement in place and the buyer has reversed the corresponding ITC. So there are certain difficulties faced by them. All such things, how am I to know whether the buyer has reversed its ITC or not? That I will discuss little later. Even after issuing this circular, there are persistent ambiguity. Despite these clarifications, significant questions remained unresolved, particularly concerning the secondary discounts given by manufacturers to dealers in a multi-tier distribution. So in this case, this circular is not giving any clarity and the revenue abruptly rejects your claim. Treatment of promotional schemes without explicit pre-existing agreements. This is an ambiguity. At times, certain seasons are on head, and all of a sudden, if you really want, and if at times there are dumping of goods, of imported goods in a market, in that case, whatever was decided, that decision has to be reworked and relook at it. Then in that case, the goods are being dumped in a market without agreement there in place. Such thing is not yet been sorted out. That is required. distinction between the price reductions and the consideration for services. As I have stated, the word in section 2, subsection 31, which defines consideration inducement. And that is where they really want to harp and state that there is a deemed component of service there, and that service is being provided by the buyer to the supplier, and they want tax on such things, which is absolutely bad. As I have stated that it is expected that the supplier see that the buyer reverses the ITC when secondary discounts are being allowed. So there was no mechanism available. How am I, as a seller, how am I to know whether Mr. Parth has reduced his ITC or not, or Mr. Pranav Pai has reduced his ITC or not? So to come over this, and since we are living in the era of IT revolution, it is expected that everything is available there on the system. But till IMS comes into an existence, this is not possible for anyone to have a control over their buyer, whether they have reduced their ITC or not. Then in that case, to come over this difficulty, they have came out with a circular 212 dated 26th June 2024, after 5-6 years. In that case, it is expected that you have to either get the self-declaration authenticated by the buyer, or a CA or CMS certificate if the value of discount exceeds 5 lakh of rupees. So no existing system, as I already stated, that there is no existing system available in the hands of a supplier to see whether the buyer has reduced the ITC on the corresponding discount which is offered by the supplier after sales has taken place. In that case, so interim arrangement until the system exists, that is till the IMS come into an existence, supplier should procure a certificate from the recipient, CA or CMA, attesting that the recipient has reversed the required ITC. Certificate must include credit note details, invoice references, and amount of ITC reversal, and relevant return or the document through which reversals was made. At times, certain reversal of ITC without reflecting therein written, at times by way of DRC 03, people are reversing. Whatever may be the reason, that has to be authenticated where the discount has exceeded 5 lakh in a financial year. And if the benefit is lesser than 5 lakh of rupees, then we have to obtain certificate from the supplier that he has reduced the ITC. And this circular is withdrawn by way of a circular number 253 dated 1st of October 2025. So once again, we are in lull till IMS is in place. So everything, whatever amendment government has proposed, they are in piecemeal. And this never gives any finality. And instead of smoothing out the process for the supplier, the process is, they have made complicated and the litigations are there. At last, as I have stated some time before that when the 56th Council took place and they have proposed an amendment to section 15(3)(b) and section 34. At relevant time, we thought all these controversies will be put to rest. But instead of putting to rest, they have made more complicated this circular by way of issuing circular 251. So in brief, I'll discuss that aspect. Post-sale discounts offered by a manufacturer or to its dealer. If no agreement between the manufacturer and the end consumer, then the two independent sales transactions from the manufacturer to the dealer and the other from the dealer to the end customer. What was the necessity in coming out with this clarification? I have my own doubt about, but in such a case, it has been clarified that such discount is not considered not a consideration and cannot be considered as an inducement to supply of the goods manufactured, and there is no worry about the disallowance of the your claim. If the agreement between the manufacturer and the end customer exists to supply goods at a discounted price, then such discount is to be included in the overall consideration, as it is an inducement towards the supply of goods by the dealer to the end customer. It tries to say that you are not entitled to a secondary discount. 2, come out with all these nonsense thing, all compliance. Simpler way, they have stated that you issue financial credit note. Do not reduce the tax liability already discharged. Yes, you are not entitled, since it is a financial credit note or a commercial credit note. You don't reduce the tax liability, and accordingly, in the hands of a buyer, they also need not reduce the tax liability. And 3, the promotional discount clarity. Promotional discounts provided by the dealer to customers without any contractual services obligation do not constitute a separate taxable supplies of service. If explicit agreement for the promotion exists, separate supply is taxable. See, at times, friends, even in the example given in the circular, they have stated that if the discount relates back to some promotional activity to be carried out down the line by the buyer, then it will amount to like advertising, certain hoardings, and for that he is being reimbursed. Then in that case, it will be a services availed by the supplier, and the buyer will have to issue and consider these as a outward supply in the hands of a buyer. This is what this circular, instead of clarifying, reducing the litigation, they have increased more litigations. So having said that, whatever proposed amendment, whatever circulars are issued by the government, they are issued in piecemeal. So they have made task more difficult. They have issued circular number 105. Immediately within a period of 3 months, that circular has been withdrawn. So till 12th of September 2009, there were only 2 circulars, 92 and 212 were in existence. Now 212 is also been withdrawn, and circular 251 and circular 92 that are there in existence. But effect, as I have already stated, that section they have proposed, was proposed in the council meeting, 56 council meeting, that section 15(3) will be amended, and simultaneously 34 will be amended. But 34 is amended with effect from 1st of October, but no such amendment is yet been carried out in section 15(3)(b). Of course, they will carry out, but as of date, the old section 53(b) is in existence, along with new 34 is in existence. And now only 2 circulars are in existence after 1st of October, circular 92 and circular 251. So the impact of all these things I have summarized in one single slide. As long as financial credit note is concerned, when the discounts are given through financial or commercial credit notes that do not reduce the GST liability already discharged by the supplier, and the recipient is not required to reverse the ITC, issue is very, see, it is a simple financial or a commercial credit note. The issue is in respect of where the benefit of tax is passed on down the line to a buyer. In that case, whenever the discount reduces the taxable value and the GST liability through a proper credit note under section 13(4), the recipient must reverse the ITC proportionate to the discount received. So whatever the amount as there mentioned there in the credit note needs to be reversed by the buyer. The reversal must be done in the return for the period in which credit note is received, ensuring the revenue neutrality, that the government need not lose on account of this thing, it is expected that the buyer should reverse its ITC as and when the month in which the credit note is acknowledged by him. The critical ITC considerations and the documents requirements for the ITC treatment. As stated there in section 15(3)(b), discount agreement documentation, maintain a clear written agreement specifying discount terms at or before the supply, including quantum, conditions, and the timing of discount payments. 2. Type of credit note issued. Clearly distinguish between the financial credit note and the tax adjustment credit notes in accounting records. So, when the benefit is passed with tax, then the amount of GST should be gone. It should be posted as on the debit side. It is ITC being reversed, and accordingly the sales is to be reversed. And in case of financial credit notes, normally it is debited to profit and loss account. ITC reversal calculation. Maintain detailed calculations showing proportionate ITC reversal corresponding to the discount received. Cross-reference to the credit notes. So the what is being amount mentioned there in the credit note, exact amount is required to be reversed. And ensure accurate reporting in GSTR 2A 2B, reconciliation and timely reversal in GSTR 3B to avoid interest and penalty implications. So friends, if you forget to reverse ITC, then immediately you will receive, because there will be difference in your 2A 2B, and immediately you will be saddled with the notice, and you will be required to reverse that ITC along with the payment of interest. The distinction between the financial and the tax credit notes is perhaps the most significant practical takeaway from the circular 251. So friends, I am clear on the aspect, and it is expected that the clear trail be maintained by the supplier, how the correspondence and how it is been acknowledged by the supplier. Keep all these evidences ready when your case is been taken up for audit. That part I will take up little later. If after complying the law, if you have issued your circular agreement offering the discounts after the sales has been taken place or whatever means before, plus you have complied all the conditions of section 15(3)(b) and 34, still your case, your plea of reduction in sale price is not acceptable to the revenue, there are various case laws not under the GST, but they have given certain ratios, and there are very critical observations made by those either the High Court or a Supreme Court. And as long as we are concerned, there is a very important case law pronounced by the Supreme Court in the case of Commissioner of Sales Tax, Board of Revenue, Ernakulam versus the Motor Industries Company, 53 STC 48. What is the takeaway from this decision? Supreme Court observed any concession shown in the price of a goods for any commercial reason would be a trade discount. Trade discount means a secondary discount, which can be legitimately be claimed as a deduction. Such a concession is usually allowed by a manufacturer or a wholesale dealer in favor of another dealer with the object of improving the prospectus of his own business. Any concession in price shown in such a circumstances by way of additional incentive with a view to promote one's own trade does qualify for deduction as a trade discount. The fact that the discount is not allowed at the time of sale but on a later date at the end of the month would not make it any the less a trade discount. This is what, and there are wonderful observations observed by the judges. It is stated that ordinarily any concession shown in the sale price of a goods for any commercial reasons would be a trade discount which can legitimately be claimed as a deduction from the turnover under clause whatever under that law, or as a wholesaler dealer in favor of another dealer with the object of improving the prospect of his business. Any concession in price shown in such circumstances by way of an additional incentive with a view to promote one's own trade does qualify for a deduction as a. And there are very, very important observations. As back as in 1983, when service tax was not in existence, it was observed that it cannot be termed as a service charge or a trading in. So the judges have clearly stated that if you are complying the conditions thereof of a pre-existing agreement in existence, in that case, such deduction is clearly allowable and there is no component of service as envisaged in the circular 251. That is not the case. That is what I would like to impress, that that service component you can take only in case where some advertising cost is incurred by the buyer or some hoarding, etc. And then in that case, you can invoke and that there is a component of service provided by. Otherwise, in no case, if you have complied with the conditions of your agreement of passing on the secondary discount, in that case, there cannot be any component of service. Ultimately, yeah. It will litigate only further in that case. But in a simple case of advertising on behalf of the very particular product or a holding of that very say company like Samsung, LG, whatever, then in that case there will be a component of service and output tax to be charged by the buyer. Then, Haji.
Now, our question is, suppose he has not charged the supplier, whatever buyer is now becoming supplier, but he has not charged the tax. Can it affect my claim of discount?
Yes, because yours is not a secondary discount. You are reimbursing him by way of a credit note. That issue has been clarified in Circular 251. Secondary discount is altogether a different thing. But here you are issuing a credit note for reimbursing the buyer. And then that case, it has been considered as a service provided by a buyer to a supplier. Second important case is as a practitioner on a VAT side or also BST Act. There is a very important case law, State of Tamil Nadu versus Ultramarine and the Pigments, reported in 46 STC. The wonderful observations made by the judges. The SSC gave a quantity discount based on the total purchases in a specified period. At a period end, credit notes and sometimes checks were issued to customers to incentivize the present purchase, not the future ones. In short, these try to say that some type of a pre-agreed discount is been passed on to a buyer. In that case, it is allowable. Tribunal held very same view, but against that tribunal decision, the revenue went into the High Court and High Court approved the decision of the tribunal. Madras High Court held that the discounts qualify for deduction from the sale price. Net price after discount is the actual taxable sale price. even if not a strict cash discount, it's deductible if it alters the price payable. And similar view has been done later on in few of the judgments is been taken. One is in case of Mapra Laboratories, Days Medical Stores, Gulf Oil Lubricants, and one more decision. Even if you look at the old excise decision, the decision in case of CC versus the Hindustan Liver Limited reported in 142 ALT, page 513, the quantity discount to put in it simply works thus. A dealer receives from the SSE a stated extra quantity if he buys a certain other quantity. That this will happen is known and agreed at the time of transaction is entered into. It is therefore a trade discount and the authorities below have correctly allowed it as such. So in short, under the relevant excise laws, it is also been accepted that whatever discount offered in that transaction is allowable, and on the reduced amount the excise is payable. Another decision is Purolator India Limited versus the Commissioner of Central Excise, Delhi. Once again, a Supreme Court decision. The Supreme Court affirmed the decision of Bombay Tire International Limited in another Supreme Court decision, Madras Rubber Factory, a very celebrated decision, and held that the volume discussed passed on by the appellant and the actual amount of sale tax payable have to be deducted for the purpose of determining the assessable value of the goods. So these are all wonderful decisions, including Pesticides India decision, where the free supplies pursuant to the pre-agreed quantity discounts are permissible deduction. One decision I forgot in to consider, a very important decision in case of Arvind Mills Limited versus the state of Maharashtra. It is our own tribunal decision which was pronounced in 2000. And once again, wherein the issue was, if you buy 10 quantity, you will get one free. If you buy 20, you will get two more additional quantity as a free. That issue is been dealt wonderfully by our own tribunal, when the appellant had charged certain quantity at a particular rate fixed by him, which covered for the price of the quantity supplied free as per the contract. The price so charged will include also the price of goods stated to be supplied free as per the contract, and hence the transaction of a free supply is nothing but a transaction of a sale. Let me read the correct observations of the tribunal in that case. The tribunal came to the conclusion, the decision is delivered by our Mr. Tilekar. The tribunal came to the conclusion that when the appellant had charged or certain quantity at a particular rate fixed by him, which covered for the price of a quantity supplied free as per the contract, the price so charged will include also the price of the goods stated to be supplied free as per the contract, and hence the transaction of a free supply is nothing but the transaction of sale. Friends, these are wonderful observations where I am facing this case and I am in a litigation. In my own case, in one of my clients' case, they have supplied free, and because everything is now on the ERP SAP package, the value is been set at 0. But if you look at the upper line, the quantity is mentioned 100 of the very same product and the price is charged. And below that, it is mentioned quantity and the value as 0. In that case, what the officer is in my case has done, has reduced my ITC because it is a 0 value supply, and no revenue is been received in the government treasury and has reduced my corresponding ITC on the very same. So what I am trying to say, the observations as observed, and one will agree that nothing is free in this world and the business is done for the profit. But these are sales gimmick, sale schemes which are launched to push goods in the market where there will be increase in demand of a goods. And we are so much lured by such gimmicks. And we are also, as a human being, we come into that trap and we go on buying such goods. So friends, what I'm trying to tell you that you comply law properly, take support of this decision. And in one of my case, once again, another case, when I cited this case of Arvind Mill, the officer stated that this decision is a worstful case, it is not for GST, it is not acceptable. My dear friend, he is not ready to accept the ratio as laid down by the officer. The act is changed, but the business is same, the procedure is same. And I am unnecessarily put up into trouble and now I am there in appeal. Hanji.
Cannot be entitled to
Hmm.
ITC.
Hmm.
Whether Arvind will still apply?
Sir, I'll reply that thing. In the case which I am citing, 10 पे 1 free आपको मिलेगा, 20 पे 2 free मिलेगा. What is that? This scheme is been pronounced in advance. There is an agreement in place. As a buyer, you know that I will be paying. Huh? Yeah, that is also been covered by 92 also. That is what. Very. There, as a buyer, you are aware that you are buying 21 at the cost of 20. So the cost of that one is already built in your consideration, which you are paying for 100. So accordingly, you cannot by any stage of imagination reduced my ITC. That I'll touch upon. Free samples I have already considered in my first slide, that free samples, etc., where you are supposed to reduce your ITC. That is very, very clear by virtue of the bar in section 17.5 block of ITC.
ધવલભાઈ,
Hanji.
આપણે 1/1 છે. હવે આપણે that we have to pass on to the customer or no? Say sometimes we retain it also and sell it in a price.
See, what is my contractual relation as a buyer, as a seller with you as my distributor? Down the line, if I have laid down some conditions, then in that case, you are supposed to pass on that. Rest, it is not my responsibility. This is an additional discount because you are buying quantity in bulk. And if, because these are two independent contracts, right, of sale. So that is not applicable, whether you are supposed to pass that benefit down the line to buyer or not. Yes, Pradeep bhai.
No, Dhaval bhai, but here are we supposing if it is in a loss? See, when you say, because Arvind Mill's case, because I was involved,
I am aware.
and we have Sir BC Joshi Saab was handling
I'm
it.
aware.
So here we had proved it in that sense that there is no loss. So we have given them that breakup. So that's why they said that because there is no loss involved and it is embedded into this. So, yes.
Yes.
Yeah, that's what I'm
That
saying.
is what Pradeep bhai, I said, these are sales gimmick.
Hmm.
No one is doing business for a loss.
No, that's what I'm
And
saying.
nothing is free in this world.
No, so that has to there. That's
Yeah,
the
yeah.
main
And
point.
that is why the observation I
Yeah.
made, Pradeep bhai.
Yeah.
Purposely, I have not mentioned that. And this very case, the department has filed a reference in 2010, but yet we are in 2025. That reference is not yet been taken up for hearing. So, to conclude, what will be the business implication and way forward? After understanding that there are proposed amendment to section 15(3)(b, already amendment has been taken place in section 34 on 1st of October 2025. 2 circulars has been withdrawn. Circular 212 is withdrawn. by way of a circular 253. There are now only two circular in existence, circular 92 and circular 251 of 2025. So taking all this in consideration, amendment in peaceful, as a business a person, what precaution should I take? Contractual documentation requirements. Till amendment and even post amendment, business must ensure robust written agreements with dealers and customers that clearly specify discount terms at or before the time of supply. Ambiguous or post facto agreements invite scrutiny and potential disallowance. In short, what I am trying to impress that nothing should be afterthought. If it is proved afterthought, then this discount will not be, this deduction will not be allowed in the hands of a supplier. So one has to be very, very meticulous and systematic and be clear in issuing the circular instructions down the line to your buyers. After withdrawal of circular becomes even more crucial. So because it is not going to support you. So timestamp all discount scheme communications, maintain signed dealer agreements with the discount clauses, document approval trails for the discount decisions. Enhance regulatory scrutiny. The tax authorities are likely to subject discount arrangements to increased scrutiny, particularly large secondary discounts. Business should prepare for potential audits with the comprehensive documentation and clear commercial rationale. Maintain commercial justification for the discount quantum. Prepare audit defense files for the major discount schemes, as I have stated that you maintain proper trail. Ensure consistency between the discount claims and the business reality. It should not be that someone is normally what is the relevant practice there in the market. It should not be an exceptionally and such a big discount which fetch the eyes of a revenue and where it will be very difficult to prove your claim of deduction. Credit note issuance and the accounting. Very important aspect. Accurate and timely issuance of a credit note is critical. Business must implement systems to track discount entitlements, generate credit notes promptly and reflect them correctly in the GST returns. Maintain separate series for the financial versus the tax credits, tax credit notes, and reconcile credit notes with the GSTR1 reporting monthly. So friends, accounting plays very big role here. I already discussed that aspect some time back. Okay, what accounting treatment, proper GST component should go in my GST payable account and proper amount should go to my sales account on the debit side. And see that the example which I have shared of 10 pay 1 free, in that case, see that one quantity is not written off in the books. Should be there in my stock register as a quantity as allowed. Way forward, contract review and updation, continuous monitoring of the schemes, ensure passing of the credit notes within the time limit specified under section 34. Now, a query from my side. This secondary discounts you are issuing after 22nd of September 2025, wherein tax on my product has reduced from 12 to 5. In that case, what amount of tax should I pass on by way of secondary discount in my credit note? Yeah. No return. I am talking of I'm issuing a credit note for my secondary scheme. So volume discount, turnover discount, whatever. In that case, what rate of tax should I pass on in my credit note? Original. Perfect. But this is situation you may come across in your practice. Yeah. So as I have stated, currently these two circulars as of date when I'm standing before you, Circular 92 and Circular 251 are in existence. It was expected that the Circular 251 would solve ambiguities, but it has not done the same, and instead it has created more litigation, in my personal view. Now, an interesting point which I am touching upon, once the IMS is in place and an amendment to section 15(3)(b) has been carried out and section 34, does this circular stay relevant? For a principal purpose, in my personal view, this circular will have its value. But simultaneously, my question, see, down the line, I have passed on the discount based upon the agreement entered with the supplier. And I have passed on the benefit of tax. As expected, if in IMS, if the buyer do not accept my credit note and reduces his ITC, then in my case, automatically the claim will not be allowed and I have to pay the tax on gross. So this is really a very, very danger thing that one must keep in mind, that in such a case, this will be required and your claim of deduction will not be allowed once but I still feel this is because of the compliance of the system. Everything is portal run system. And if you look at the law, why? You will not succeed because the now section 34 provides for that thing. So from both the side, from IMS side and from the by virtue of section 34, you will be affected. Then the claim will be allowed.
It's just the opinion I'm asking.
They have all the power. They have all the power under the sun. They can raise any stupid queries. Why all these litigations have simple where agreements are placed in? What was the necessity of coming out with all this circular when the prince? But they have gone too far, refreshing some advantage of some clause there provided there in the section.
What is the exact point which is getting more confused?
That has encouraged you to issue financial credit note.
Hello.
No. Just 1 minute. Then my issue is, what exactly are the points which has been more confusing because of this circular 251?
They have encouraged you to issue financial credit.
So that is basically
See,
without
That means you should not.
in true sense, they do not wish to pass on the benefit of tax. They are not ready to understand. I have done some calculation yesterday. If you are not allowing him to pass on the benefit of a tax, down the line, the poor purchaser and the consumer is affected and the cost is going.
But where it is said that we should not pass on the discount?
It says, but it encourages you to issue financial credit. Circular 92 is there in place that supports your argument. Instead of clarifying more issues, they have harped upon the issue of financial credit.
But where that portion which says that you should, in circular, what is exactly the lines which are giving this idea? I just because something we are getting.
CB sir.
Yes.
Yeah. Dhaval bhai.
Haji, sorry.
Point number 3 છે circular
Yeah,
point number 3. I think what it is appearing that first of all I think the amendment in 15(3)(b)(1) wherein they are omitting the linkages of the, omitting the requisition of a pre-agreement. So I think that is one amendment which they have
That
brought
is
in.
good for us.
That is good for us. Actually, that is good for us because that linkage has been broken.
Simultaneously, Pranava, it has been mentioned there in 34 proviso.
Yeah, in 34 proviso, they are going to bring it in. But the linkages with the invoices, I think that is not
That has been done away.
that has been done away with. And one more thing here, what they have done is what point CB Thakur sir is raising is, what is the issue? I think it is that they have given an option in such cases where you have a pre-agreement, you can issue financial credit notes if you want to. I think that is where
Yeah, that is what Pranava ultimately, as we discussed sometime, the cost is not reducing and the real benefit is not passed on to the end consumer. That is what I'm trying to see.
yeah.
They can give you an option to avoid litigation at a later date. You issue financial credit note. But if you are not allowing down the line in the chain to the ultimate end consumer, we are
Where is
ending.
that you are not allowed down the line?
Hey.
In the circular where it comes out.
So
Scenario
scenario
two.
Sir,
Scenario two.
in case of a financial credit note, I'll give you an example. Your original sale price was 100. You have deposited 18% tax. Now you are issuing a credit note for, say, financial credit note for 10 rupees. So neither the supplier nor the buyer are affected and the liabilities stand still at 18 rupees, and for him the ITC will stand at 18 rupees. So ultimately down the line, the ITC will in their hand will remain same. But benefit on that 10 rupees of 1.80 paise actually should have gone to the consumer. That is not been passed on. That is what I'm trying to say.
But that circular where it says you should not be passed. Where from circular we can
That
say that.
circular, it says that what is financial credit note, CB sir?
Hey, that I agree.
Hmm.
But it's circular, how we say it?
No,
Circular is
you can take a clue from that circular. Why it will ultimately increases.
No, sir. I'll just read one part which I find also
let me
very.
understand.
I find, sir, if you see the second scenario.
Yeah.
See, what is the second scenario saying? Whether the postal discount offered by the manufacturer to its dealer distributor would be treated as a consideration paid by the manufacturer for the dealer supply of the same goods to the end
consumer.
customer as a monetary value of inducement to supply goods manufactured by him. Now there they give two scenarios essentially. One is where they're saying that there is no agreement. Then, it is just like a competitive pricing. So that is fine. Now, the third, what it writes. However, in cases where manufacturer has some agreement, not specific, some agreement with an end customer to supply goods at a discounted price. So basically, we are talking about a scenario. Take, for example,
100.
Samsung gives an offer to GSTPAM that you sell to your members, they will get at a particular discount kind of a thing. So they are saying that there is a
Direct
sort
linkage.
of a privity between Samsung and the end consumer,
Supplier.
which it is not there. So
Yeah,
it is
yeah,
saying no. So, sir, otherwise, how will Samsung have a privity?
There is no.
Which other scenario? No. So, sir, but just
Further,
Yeah.
further.
no, just go on to read further what it says. See, some agreement with an end customer to supply goods at a discounted price. Okay, fair enough. The manufacturer may issue commercial or financial credit note. What sir is saying that they are encouraging you to issue financial. So he's saying may. You can issue financial or credit note. Enabling such dealer to provide the goods at the agreed discounted rate to the end consumer. So आप 120 का चीज है, आपको 10 रुपया डिस्काउंट मैन्युफैक्चरर देने वाला है. The dealer can sell it at 110 or must sell at 110. Further, therefore, it is clarified that such a postal discount given by the manufacturer to the dealer for supplying goods to the end customer at a discounted rate should be included in the overall consideration as it is inducement towards the supply of goods by the dealer to the end customer. So even if you pay the dealer, even if the dealer you collect 110, the tax that you have to pay is on 120.
But that is, you have to prove it was with the end customer you agreed to something.
Sir, that is the thing. No, how will, sir,
The
sir,
burden is upon the department.
because
no?
what happens, no, sir, what happens in this case, no, what, at least our example, all of our clients we know that it is wholly impossible to say that there is never any overarching agreement. There is some general agreement always with the customer. Now, how will you prove that there is now the when you not with the customer, sorry, with the original manufacturer has some kind of a
Pre-agreed.
agreement with the dealer. Now, what it says is the dealer को भी यही बोलेगा ना कि what is the agreement that you can sell it at XYZ price, you will get discount. If you sell so much, you will get discount.
Correct. It is only with the end customer they have to prove. Suppose now let us take warranty given by the manufacturer of cars,
Okay.
which is given to the end customer. There can some problem can arise. Not in general. Suppose I am my buyer to my buyer, I am giving assurance that I will give discount if you sell to your end customer at 10 rupees less.
This
That
is
is not
this
a
is as per the
case over here.
scheme. But what I'm CB sir trying to
I
say that
agree. If they
to-
can specifically point out,
see, you read this circular in conjunction with 92. What 92 says and what 200
It is actually it is contrary, sir.
contrary to each other.
Sir, 92. What does
You read
92 say?
92.
Buy
You
one,
read 92.
If I have buy two get one free, buy two get one free. 92 says कि भाई कुछ free नहीं होता है. वो जो
right, but they have specifically clarified this issue because generally they are trying to cover it to not to allow discount. So on the contrary, this will help you according to me.
no, sir. But
It may
sir,
be
if
matter of-
it will help me if I am allowed to issue if there is a regular credit note, regular credit note, then the tax insurance will reduce and the ITC will reduce. In that case, I don't have to pay tax on 120. Here, what happens is I sell it 110. I collect 110.
What I'm
The
getting?
tax has to be paid at
I'm getting
120.
100 rupees only.
Ah,
I'm paying tax
I have to
120.
pay at 120.
Sir,
I
CP
think
sir.
Dhaval sir,
Ah.
if you will read that, what is this financial credit note? Basically, whether principally, how can you say that I have an option in doing that?
there is no reduction allowed. Like under earlier act, under VAT 57 no reduction 5 upon 105. That is not the case. Now we are portal driven law. Even under the VAT also we were doing and the queries for the mismatch was we were receiving.
Actually, but in that we like
And
financial
now
credit note-
and Pradeep bhai, now the section 34 is very specific.
No, financial credit note, we really understand is that it is a post sale, that is that you are for some cash and all that, that you are paying in advance or something. They may give you that discount. That is what is, I don't have to, that is what clarification.
What was
What
the
it is-
necessity otherwise of clarifying? See, these circular is basically starts with the post sale discounts. So the intention is to clarify the issues arise out of that thing. So your query do not correlate with the circular, Pradeep bhai.
Dhaval bhai,
Yeah,
the post sale
that is what I am saying.
the post sale discount from the manufacturer till the retailer, unless the retailer is under composition, from the manufacturer till the retailer, even if it is a financial credit note, whatever tax the manufacturer has collected from the distributor, he has got the ITC. Whatever the distributor has paid the tax, the retailer has got the ITC. Yeah, revenue neutrality. So only thing is, if the retailer is
Revenue
not under
neutrality, I am not
composition,
Ankit bhai. Revenue neutrality is altogether different. एक हाथ से दिया, एक हाथ से लिया. That is not the case. But at the time when you are considering the financial credit note, down the line, the benefit of tax should pass on to the ultimate consumer. And that remains because that benefit is not getting because that ITC is being claimed at a higher amount.
so the retailer can, reduce the amount of financial credit note what he is going to get from, in the chain. So marginally only the tax value on the discounted price, because he is not able to reduce the ITC, it is going to be a very marginal, sir.
See, and the reason for the financial credit notes are various. Not only this secondary, there are various reasons for the issuing the financial credit notes.
Because this will save, everyone from the hurdle of, proving that the buyer has reduced the ITC and I have reduced my liability.
because then this is a very, vicious circle
Mm.
that the supplier is not allowed to reduce the liability unless he proves that the buyer has reduced the ITC. And there are many cases. See, what we are discussing right now is only from the point of view of the supplier. Let us now go into the shoes of the buyer also, na sir.
Yes.
Many a times there are suppliers who pass on a credit note for any reason. He may not have received the payment. Okay. So,
But that, see, we are discussing today secondary discount. That is not the case in the hands of a down the line to the supplier. He may on his own.
Huh.
It is his own venture. Then that same principle will apply down the line also.
yes, because
In-
then see there are various cases
But
also.
my dear
that-
Ankit Bhai, these you are discussing hypothetical.
No, this is
see,
not hypothetical,
let
sir.
me let
We have a very good case.
I don't agree with you on this. In as much as let me come.
Sir, in
Ah.
Hindustan Unilever before Rajasthan High Court, it was their contention that we are not going to allow you the reduction of price, the tax on the price by way of credit note unless you prove or you bring it on record that your buyers have reduced the
That is
ITC.
a pre-existing understanding between the supplier and the distributor. And what is been stated that down the line you pass on this, that it is a case altogether different. But you are discussing, Ankit Bhai, okay, I pass on this thing, then I came out with the special scheme. And down the line, if I don't get that thing back, then it's a different thing. That is what you are trying to say.
So, see, my point is, sir, even the buyers have, see, the conditions are for both of us, sir. For
Correct.
the buyers also as well as the suppliers also.
Yeah,
For the buyers-
other side of a coin.
For the buyers, we received the notices from the department stating that there is a CN which is reflecting in your 2B, you have not reduced your ITC. Now the
Dealer. Third person you are discussing it.
So
That is what I will.
I think so. I'll just like to add to what this point is going on. So we can do this with an example. Say the Samsung dealer is having a say some agreement with the end customer, or maybe I think it is more so in the case of OEM dealers. Say it is a warranty thing or a
Yeah,
Tata Motors thing, wherein this is going to apply at the most, and wherein there are certain warranty spares which are being replaced by the last service provider to the end user, say the motor car owner who will come and get that parts replaced under warranty, and that amount is being reimbursed by say Tata Motors to that end.
Case we have got.
Yes, sir. So I think here they are trying to link it, because here what they are telling the manufacturer and the end customer, and they are telling, say, for example, for that product, a discounted value is being charged, and the discount is being given by the manufacturer to the dealer, who in turn has to give it to the end user. There, say, the manufacturer will issue a financial credit note, and that again they have given a reference of he may issue a financial credit.
The word uses may.
He may issue a financial credit note. Then in such cases, the dealer who is selling that product, the end dealer, the final dealer who is selling that product,
Retailer, that is.
say the retailer at that point of time, he will have to add that discount amount into the sales price
And pay tax.
and pay tax on that.
Perfect. That is.
I think that is what this entire controversy is. There is one more linkage to this. What will happen to the intermediate wholesalers, distributors who will be, through whom this will be passing on? I have just,
Instead of clarifying things, they have made things more complicated. Though there are only two circulars now in existence after 1st of October 2025, 92 and 251. But things are more, means they have worsened the things, situation.
and the wordings used are so ambiguous in this.
And Pranavai,
extremely ambiguous.
And the stakes involved in such cases now are quite big.
Correct. And so I'm on the wording which CB Thakur sir was saying, that where is that confusion? In this context, what they have mentioned, therefore it is clarified that such post-sale discounts given by the manufacturer to the dealer for supplying goods to the end customer at a discounted rate should be included in the overall consideration, as it is an inducement towards the supply of goods by the dealer to the end customer. So it means it is possibly only the end customer who is the dealer who is finally selling to the end customer, he only
Correct.
will have to do that.
Correct, correct. Yes,
One more question comes. Sir, if we are looking at yeah. So, sir, one more question that comes. When we look at inducement, okay, what it is casting the liability on the middle person, the second person, that
buyer.
even if it is 110, you sell for 110, you collect 110, you have to pay 120. Okay. Now the question arises here, when it is an inducement. Now suppose it was truly an inducement. Sir, if it is an inducement, then I am doing a service for whom? And whom am I supposed to charge?
Who is the recipient? Who is the recipient? That is $1 million question.
Sir, this is covered.
हाँ पूछो.
Sir, in Santosh Distributors, in Santosh Distributors, the Castrol India, this similar case is covered, which says where, the Castrol is asking the distributor to sell the product at a discounted rate, and that amount of discount will be reimbursed by Castrol to
That is
Santosh
inducement.
distributor.
That is inducement. That
Correct.
is, yeah. Yeah.
No, but sir, then similar activities is done by all electronic companies or mobile phone companies also. A phone which is, iPhone, which is now, launched at MRP of 1,75,000. 3 months down the line, the rate will come down at 1,50,000.
It is all business practice, my dear Ankit Bhai. Normally, you come to your break even when you sell 40 to 50% of products. Then rest, whatever is your benefit.
Correct.
So you are duty bound to clear the stock by offering discount only. Speak. Just a minute, please.
Subramanian sir.
Yes, sir. Sir,
Yeah.
say at the end of the at the end, whether the circular is a beneficial one or complicating the issues. So the speaker says it is complicating more. Say, what are all the complications? One is you are talking about the cost will be increased. Then other than that, what is the complications in the circulars? So because according to me, it is more favor and it clarified a lot of issues. And the speaker again and again telling that there are more complications, there are more issues. What are all the issues in this circular? Sir? That other than that, the cost will increase. Yes. Yes, sir.
Where there is an inducement, there is bound to be a case of a service providing and the output tax is payable.
Correct. If there is any inducement and if there is any marketing activity and if there is any service, then only it will come.
Yeah,
If there is no such a service and if there is no agreement at all for service, it is only a mere reduction in price. Then in such a situation, the inducement is not applicable. Then in such a situation, the service will not come. Correct, sir?
In that case, still I am of the opinion whether the agreement there is in existence or not. Once it is inducement, there will be a component of service and it will attract tax in my personal view, sir.
Say that is being clarified, sir. Say the essence of the matter is that a contract of sale is completed on the transfer of title to the goods to the buyer. Once this happens, the buyer becomes the owner of the goods and the seller has no right on the title or claim therein. The dealer takes a ownership of the goods purchased from the manufacturer and subsequently sells them to the end customer. And the transaction between the manufacturer to the dealer operates on a principal to principal basis. These discounts are simply given for competitive pricing to push up sales and merely reduce the sale price of the goods and are not at all linked to any independent activity rendered to the manufacturers.
But in short, what I am trying to say that these are two independent contract of sale, one by manufacturer to the distributor, and there is another sale between the distributor and the end consumer or the retailer.
Correct.
So
Correct, sir.
ah,
So therefore it says, as long as it is a discount, and once a product is sold, whether sold by the manufacturer or by the retailer or by the wholesaler to the customer, then title of the goods is transferred. After that, it is only on principal basis. Therefore, the discounts are simply given for competitive pricing. Therefore, it cannot be considered as an independent activity rendered to the manufacturer. It says very clearly that there is no service by the dealer to the manufacturer or wholesaler to the manufacturer or dealer to the wholesale dealer. It says very clearly, unless there is an independent activity.
yeah, true.
So therefore, this circular clarify lot of issues which
Yeah,
we
yeah, that is
face.
what I have
In
concluded
number
in
of
my
in
presentation,
number of
sir.
cases, yeah, in number of cases, the department took a view saying that as long as you have received the discount once you received it, it is you are doing some services. That is being is clarified. This circular says that once you received the discount, unless if there is any agreement for rendering a services, otherwise it is only a discount. Therefore, there is no.
Correct,
Therefore,
correct.
yeah.
So
Yes, sir.
like that is what, sir, I have given an example. Ki Baba, you provide the advertisement cost, you incur holding
Correct.
cost, etc. Of the company. Then in that case, it
Yes,
amounts
sir.
to providing of a service, sir.
Correct, sir.
In other
That I
words,
agree.
there is
That
no component of
circular
any
also.
service. Then the question of levying tax on the credit note will not arise.
Dhaval, what will be the situation if the manufacturer pass on a credit note for rate difference?
Rate difference and what is rate difference? Tell me, Ankit bhai.
So my product of 1.5 lakh rupees, which have now fallen to 1,35,000 rupees, if I do not, pass on the rate difference credit note, the distributor or the retailer may send the goods back to me. Okay. So instead of, I telling him ki Baba, you sell it for 1,35,000, 15,000 rupees, I will, reimburse you by way of credit note. I am passing a rate difference credit note.
In my view, you will not be entitled for the deduction of tax.
For rate difference also?
Yes, sir.
On what ground, sir?
There is no agreement in place.
No, but for a rate difference credit note, why
there is no
why there need not be
any agreement,
sir?
Since there is no such clause as provided in your contract of a sale, this in my view will not be allowed.
But now,
so now you have to be careful. You have to be careful in drafting your sale contract.
Sir,
There could be a clause where in future, if something suddenly market falls and the prices of the goods reduces, if there is a dumping of imported goods and the price is reduced, then in that case, if it is agreeable for issuance of red ticket, then in that case it is allowed.
And sir, in this secondary
Discounts.
discount case, can we go into the point who is inducing whom?
See,
if I tell the manufacturer or the distributor कि सर आपका माल जो है अभी या तो भाव कम करो या वापस लेकर जाओ.
See, in that case, what Ankit bhai, what I am trying to tell you, inducement will, in my personal view, will come in picture in case of a secondary, this where there is a component of some service being there.
Correct, sir. But then who is inducing whom? That's what I am saying. If I say to the manufacturer, sir, आपका माल नहीं बिक रहा है, काम करो उठा लो. He wants to get his material sold, sir. Apple wants his iPhone to be sold in India. If he is not willing to reduce the price, if I say, sir, माल वापस लेकर जाओ.
Yeah, there is one second coming to the contract. Contractual obligation.
Yes, but then who is inducing whom over here? If I tell to Apple or to his distributor, sir, आपका माल नहीं बिक रहा, आप उठा लो. I cannot sell it at loss.
Sir, in that case, only financial credit note is feasible in absence of any contract clause there in the your sale agreement.
In the pharma industry, if you
IRD means full form?
sir, rate difference. People said, na. So that was practice still there in the pharma industry. So,
You will land into trouble.
sir, many people like Alchem and Cipla also.
And sir, the material which is, lying with the
So there must
retailer
be
also
some
for
rate
more than 6
contract,
months.
whatever there is in place with all customers. You have to once again go through the, see, whenever a distributor is appointed, a contract is entered into. And there may be one condition. In that case, yes, rate difference, you are entitled to pass on the benefit of tax. Yeah. Yes, Mr. Rathore, please.
Rathod sir, please sir speak.
Query has been solved. It is able-
Yes, Mr. Rathore.
Query has been solved, which was there in my mind, so it has been solved.
Your voice is not audible.
Query is solved. Query is already covered.
Okay, okay, thank you. Thank you very much. And with this note, thank you. Thank you for giving me this opportunity, GSTPM. Thank you.
Thank you, Dhaval bhai.
Thank you, Dhaval bhai. I now request Nitin ji to please offer a vote of thanks to our speaker. Respected President and all the learned person on dais and in front of me. It's today we have had an incredible, insightful session led by our esteemed speaker, Shri Dhaval Talati ji, on treating a secondary and post-sale discounts under the GST Act. Sir, your expertise and clarity on the complex topic have been truly enlightened us. Shedding light on the practical implications and helping us navigating the intricacies of GST compliances. Your efforts in dissatisfying these aspects will undoubtedly benefit our professional journey, enabling us to handle similar scenarios with confidence. I extended my sincere gratitude to our chairman, Shri Pranav Kapadia sir, for steering this event so effectively and provide us with a platform to learn and grow. A big thank to our co-convener, Shri Ajay Talreja sir, for your relentless efforts in organizing this wonderful session and ensuring this success. Your dedication to fostering professional development is highly appreciated. My heartfelt thanks to the seniors, C.V. Thakur sir, Kapadia sir, and all other seniors, and my dear friends, to continuous guidance and support. Your wealth of experience and wisdom is a beacon for all of us aspiring professionals. Last but certainly not the least, I thank each one of you, dear attendees, for being a part of this enriching session. Your active participation and engagement have added immense value to today's discussion. Thank you so much.
Yeah, before we end, I would like. Yeah. Before we end, we will be rising for the national anthem. Before we rise for the national anthem, I just have one request. Please enroll for the GSTAT seminar tomorrow. Whoever is left out, please don't miss out the opportunity. The enrollment will be open till 11 yes, tomorrow. So please don't miss out that opportunity. And the entire office staff, the conveners will be there to help you in case you have any trouble. Thank you. We'll rise for the national anthem.